Meanwhile, the Monetary Policy Committee of the Central Bank of Nigeria has reduced interest rate from 12.5 to 11.5% after deliberating on tough choices caused by the negative economic growth rate recorded in the second quarter of this year. Arise correspondent Chinaemerem Joseph has details.
Another Monetary Policy Committee meeting held amidst daunting economic challenges that have badly affected growth in the last few months, with growing concerns that Nigeria may go into recession in the next quarter of the year. Negative economic growth rate, rising inflation rate, high unemployment figures, drop in government's revenue occasioned by the crash in the price of oil, and a number of other challenges are what Nigeria currently struggles with. These issues, the Apex Bank governor says, left the committee thinking of what decision to take regarding key policy parameters. The committee, however, decided to review downwards the interest rate by 100 basis points.
MPC voted to 1. Reduce the MPR by 100 basis points from 12.5% to 11.5%. 2. Adjust the asymmetric corridor from plus 200 and minus 500 basis points to plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5% and 4. Retain liquidity ratio at 30%.
By reducing the interest rate, cheaper loans can be assessed. This is then expected to have a ripple effect on local production, reduce unemployment, and support economic growth. The Monetary Policy Committee believes reducing this key policy parameter will help address continued weak economic growth recorded across almost all sectors of the economy.
The key factors considered by committee as likely to exert upward pressure on domestic prices in the near term include the prevalence of security challenges in the country, adverse weather conditions causing flooding in some farming regions, the increase in petroleum pump price, deregulation in the electricity tariffs, low crude oil prices, and exchange rate adjustment. The committee noted that available evidence does not support the view that the rise in inflation was due to monetary factors. The economy may continue to grapple with the effects of the pandemic throughout the rest of the year, with persistent focus on activities meant to reverse the contraction. MPC projects growth at positive levels during the fourth quarter 2020 or latest first quarter 2021.
This adjustment is expected to work with measures already introduced by both the fiscal and monetary authorities in addressing concerns about the nation's poor growth. More interventions are also expected to be unveiled by the CBN through its development finance projects in weeks ahead.
Total disbursements from the bank's interventions in the wake of COVID-19 pandemic amounts to 3.5 trillion, including real sector funds, about where 216.87 billion has been disbursed, COVID-19 targeted credit facility, where 73.69 billion has been disbursed.
Despite all the economic challenges brought by the pandemic, the governor notes that the financial soundness of the banking industry remains intact, as lending to various sectors of the economy, especially agriculture, will be increased. Chinaemerem Joseph, Arise News.